Hello everyone, and thank you for joining us. My name is Eric Hartman. I am the Training and Support Manager for Sunward. Today you're going to learn about all the great incentives that are available for the purchase and the installation of a solar hot water system. In some states that can add up to 67% of the total cost of the system. Joining us, we have a certified public accountant, Chris Knapp, who's going to answer any questions that you may have. In today's webinar, we're going to discuss the Residential Energy Tax Credit. It's a 30% federal tax credit that's available for the installation of a solar hot water system. We're also going to discuss the common questions pertaining to the Residential Energy Tax Credit. Filing for the federal credit is a simple process, and we're going to take you through the basic steps on how to do so. And without further ado, I'll pass the spotlight along to Chris. Thank you, Chris.
Good afternoon, everyone. Today we're going to cover the Residential Energy Efficient Property Tax Credit. You can find that in section 1122, paragraph 25D of the tax code, just in case you want to look that up. And this is actually covered by the American Recovery and Restoration Act of 2009. And this act has made some significant changes to the tax credits that are available to you as a homeowner for the installation of various energy efficient products. The one we're specifically going to be talking about today is the solar hot water heating system that is sold by Sunward. That's available for a 30% federal tax credit. One thing I want to point out in the beginning is that in order to qualify for this credit, it has to be certified by the Solar Rating Certification Corporation, the SRCC. If you don't have a system that is certified by them, it is not available for the credit. The Sunward system is available for that credit, and you can print out that certificate online through our website. We're going to talk about what is covered when you install the system, both the product and the labor. We're going to talk about the caps on the tax credit that are available to you, and what happens if you don't use the tax credit in the current year. So today I want to talk about the difference between a tax deduction, which you'd be taking on Schedule A. Those are things like the property taxes that you have on your home or your interest that you pay on your home loan versus a tax credit. A deduction does reduce your taxable income, but it doesn't reduce your tax dollar for dollar like a tax credit does. So a deduction, the way a deduction works is it's actually the amount that you're deducting from your taxable income times your tax rate. I have an example up here. If you had a $1,000 deduction and your tax rate was 20%, your actual tax savings would be $200. The difference is if you have a tax credit, as I said earlier, it reduces it dollar for dollar. So a $1,000 tax credit reduces your taxes by $1,000. So we have some questions that are commonly asked, and I'm going to try to go through those so that you get an understanding of how this tax credit works for you. The first question I have is, if I'm not paying in, how will this tax credit have an effect on me? Well, it actually operates irrespective whether you paid in money or not. If you have a tax liability, the credit is available to you. It doesn't depend on whether you paid in or not. It depends on whether you actually have a tax liability as a result of having taxable income. Second question is, a tax credit does not give me any money back in my pocket, only lessens the amount I may owe. And if I'm already getting a refund, I have no need for it. Well, the answer to that is the Residential Energy Tax Credit is a non-refundable credit. And if you have any tax liability from income taxes or from alternative minimum tax, AMT, it could increase your refund. How does this incentive work with other credits I'm taking? Certain other credits, and those are on lines 47 through 50 on your Form 1040, and tax credits from page 1 of Forms 5695, those are for the deductions for things like windows and doors and insulation that you've put in, are used to reduce your tax liability first. Any remaining tax liability can be reduced or eliminated with the Residential Energy Tax Credit. Before I go on, are there any questions out there?
Yeah, I actually have a question. I was wondering if I replace my existing hot water tank at the same time that I install a Sunward system, can I still claim the 30% credit?
You can claim the 30% credit on the solar hot water system and the tank that's associated with it. you cannot claim a credit on replacing your existing hot water tank. So it has to be only things that are related to the solar hot water system and not to replacing other things that are normal parts of your plumbing in your home. Okay, I have another question. Is the tax credit taken before or after my state incentive? And the way that this works is first you deduct your state incentive and you get to a net result, and then you multiply the net result after taking your state tax credit times the 30% to figure out your federal tax credit. If you're going to receive any other types of credits, certain municipalities or utilities offer an additional tax credit beyond the state tax credit, you would also deduct those before calculating your federal tax credit. How is this credit different from the 30% tax credit that is capped at $1,500? Prior to the Recovery Act of 2009, all the energy tax credits were capped at $1,500. The American Recovery and Reinvestment Act actually eliminated any cap. So now you get 30% regardless of the amount that it costs you to buy the system and install it. It also is applicable to certain modifications you may have to make to your home to install the system. Are there any other questions before I go on to talking a little bit how you actually prepare the Form 5695?
Yeah, actually, I have two properties. Can the tax credit be used on the second property?
The tax credit is only for your main home or your domicile. That's where you spend most of your time during the year. So if you have two properties and you spend 51% of your time in one property and 49% in the other property, then the property that you are spending the most time, the 51%, is the property that you'd be allowed to take the tax credit.
I actually have another question too. Is there a limit to how much credit I can receive?
As I said earlier, there's no cap on the amount of credit. So it's the total cost of the system plus the cost of installation plus if you've made certain modifications on your home to be able to accommodate the system. So your 30% tax credit is multiplied against the total cost of all of those items. Any other questions?
Yeah, I was just wondering, how long can I continue to roll over any of the unused credits?
The American Recovery and Reinvestment Act is through 2016. If you do not use the credit this year, you can roll it forward to next year, which would be 2011. If you didn't use it in 2011, it would continue to roll forward until you were able to use the credit. I cannot speak at this time knowing what Congress would do with the tax credits after 2016, whether they extend them or not. That's something that we'll have to wait and see what happens.
When will this 30% federal tax credit expire, do you know?
Well, again, it's right now it's slated through year 2016. Now is probably the best time to use that because with the change in the administration and the changes going on in Congress, there's certainly every year there's significant tax changes. So my best advice to you is while the tax credit's available, I would take it and use it.
And I think you may have answered this already. I just wanted to double check. Does the tax credit cover the cost of the installation as well?
Yes, it covers both the system and the cost of installation. And in certain states, you're required to have a certified installer. Not in all states, but in certain states, and it certainly would cover those costs. Okay, if there's no more questions, I'm going to talk a little bit about how you actually prepare the Form 5695. I know there's a lot of you out there who probably use TurboTax or some other tax software that you either download or purchase from a store. My recommendation to you is everyone's tax situation is different, and especially if you're trying to plan the best use of this, I would advise you that seeing a reputable tax preparer and tax planner is a good idea because everyone's situation, there's small nuances that may affect you. Certainly if you have the software you can do this, and I'm going to walk you through if you have a relatively simple tax situation. The first sheet that I have up here is the back of the Form 1040. Some of you may find that you're filling out a simpler version of this, but I'm going to go through the 1040. You cannot prepare a 1040 EZ if you're applying for the tax credit. You have to fill out at least the 1040. So what I want to point out here is on line 46 is the calculation of how much tax you owe, both regular tax and alternative minimum tax or AMT. This is what you will be getting a credit against. And it does not include things like self-employment tax or other taxes that you may owe. The way that the tax credit works is you first have to deduct other credits that you may be receiving. These could be a foreign tax credit. These are things that you would normally find when you get dividends from a foreign corporation that you usually have tax and you're applicable to get a credit. There are other things like child dependent credits, education credits, retirement savings credits, and non-business energy tax credits. If you're receiving any of those, you'd be filling them out and entering them on lines 47 through 50. So it's very important because you're going to need this information when you fill out 5695. And I want to point out something here, that not all tax programs is this information automatically linked. And so when you're reviewing your return after you print it out before you submit it to the IRS, you want to make sure that you've actually done it correctly. After you deduct those credits that are on line 47 through 50, it'll give you the amount of tax that's still available to be offset by the residential energy efficient property tax credit, which is on line 52. And you want to make sure that the box for Form 5695 is checked and that you actually have entered the amount of the tax credit on line 52. Again, if you have some unused credit, you'll be carrying forward that on 2011, and that'll be on Form 5695. So why don't we jump over to Form 5695 to look at it.